Hello, everyone. I trust you guys are doing good. I promised I was gonna give you guys my zone trading strategy. I'm gonna use this video to break everything down, the concepts, break every single thing down for you. So get a pen and a paper and pay attention. So zone trading is a price action strategy that it revolves around um, what price is doing at certain price ranges, right? Of course, the general concept of price action is to try to evaluate price movements, price characteristics being displayed at certain ranges of price. A range is basically like from, let's say, from point 104 point something to 103 point something. The gap in between here is a zone, right? It's a zone and it's a range, right? The zone in between here, right? So now that that's been said, sorry, it's 11 o'clock. A new candle market just opened. Something wants to happen here, and I want to see what's going on. Volume needs to come into the market right now. Okay. All right. So basically, whatever happens when price gets to a certain level draws your attention, right? For instance, as price is moving up in this chart here, you see that it gets to this top level and it stops going up, right? And it tallies with the fundamental of price. You know that price is always going to impulse and correct. So what is causing the impulse and the correction is the volume, the liquidity that is being, moved around. But then what you want to pay attention to as a price action trader is certain price ranges that are giving a certain reaction to the market. Then you want to speculate what is going to happen the next time price reacts on that range or on that zone, right? So basically, you have something that looks like this at first glance. For uptrend, you have price coming in from the downside, right? And then suddenly it starts to reject, right? You have something like this. Then there are two scenarios, right? You might have a scenario where you get a double retest like this, and after this, you get a breakout. Then after the breakout, you have a pullback into this zone. You wait for a push away, or rather, you wait. That's the first bounce is always called your test. It's like a test of liquidity, right? That place wants to when price comes back down there. You want to gauge the amount of people who are willing to get in, and then that's how you have to go with it. So this is what your typical zone trading setup would look like. You have price progressing from the downside, right? It gets to the price range in between this zone here, and it falls off. It comes there again and it falls off. It breaks through the zone finally. After the break, you have something that we call a redistribution of volume or orders, right? Because everybody who held cells here would be taken out, and now price has an opportunity to continue the trend. So few things you need to note is the tip, or rather the highest point or the lowest point of your breakout is what you call your target point, and that's where you're going to put your stop loss or that's where you're going to put your take profit, rather, right? So when you're doing yours, your take profit is going to be, this is where your take profit is going to be. Let me change this to a bright color so we can see. So this is where your take profit is going to be, right, at this peak. Very good. It's a very, very simple, straightforward strategy. Now, it's something that you can follow through and back there. So it's something that you can follow through. And I just want to show you guys like a quick example. This is one of the setups that a setup I want to play out for you now. Is one of the setups we caught all the way back in July. right? All the people who were in my mentorship program, you already understand how effective this strategy is. So let's just keep playing this and let's see what goes on. So we're watching price now develop, right? Naturally, we're watching price develop. All right. So something just, if you pay attention very well, you see that something happened here. There was something going on here, and you see that this is a breakout. Now, just by looking at this chart, this is an uptrend, right? Now, you could mark here and wait for price to come down here. There was this here, but now we are trying to anticipate a bullish breakout. Since we're anticipating a bullish breakout, look at this level here, right? Let's first mark out all the zones that we can see. Anywhere you see price get to and reject, right, that place is qualified as a zone, right? So all these places here I just marked out for you are zones, right? Now what you want to do, remember what we're looking for is we're waiting for price to react from our zone, then break out of our zone and react twice again. Now the concept of reacting twice is something I will have to explain to you, maybe but reacting twice basically is you saying, okay, I want an extra confirmation. Now, aside from other confluences like Fibonacci or any other thing you might want to use for your analysis, having price break and have a double retest is literally everything you need. Now, I always like to put my entry at the top so that it will encompass the full week, right? Now, we have this, so let's continue this and let's watch price progress. All right, so we have price breaking out. Now, as price broke out from here, remember what I told you, the peak or the trough, the highest point or the lowest point of every breakout is where your target point is. This is the level where 100% of the time, as long as you find an opportunity, this zone must be swept, right? As long as you find an entry opportunity, this is where your take profit is. Now, sometimes zone trading always has the potential to take your trades more than 1:3. But sometimes it's always easier for you to just wait for price to sweep this level and you're done with your trade. Now, let's continue. Now, remember, we've seen our breakout. We've seen what happened previously. Price got to this level and rejected. Remember, there was no level here before. But from our visual cue, we see that price came here and went, price came here, rejected. So we drew our square here and we are waiting for price to break out. For the same thing happened at the bottom here. Now, assuming we got a bearish move down to this level, here will be our target point. But as you can see, this was where we got to. So this is our target point. Now, all we are going to do now is what we are waiting for now is we are waiting for price to come back down to this level here for a first bounce like this and a second bounce, and then we will take our trade all the way to this point up here, right? So this is what we're waiting for. So let's watch price progression. Now I will explain certain rules and some other things to take note of. We've not gotten our bounce yet, though. Don't be deceived. We've not gotten our bounce yet. We've not gotten our bounce yet. We've not yet gotten our bounce. Don't be moved. Don't be tricked by anything that is happening. I know, like this now, it looks like you've gotten your bounce and it looks like your trade has played out, but no. Remember, you don't have to manipulate it. Now, what people do sometimes that keeps them from really grasping this, right, is that rather than them marking out the zone that they've already spotted, when they see new formation, they tend to do something like this to try and drag it to complete. You're just manipulating the trade, right? You're just trying to manipulate the trade and you're not allowing the trade to play out in the pattern that you understand, right? Now, of course, there are times when you can, of course, obviously increase that thing a bit, but best thing for you to do is just to wait for the trade to play naturally. All right, good. So this one now is something that you might want to consider. So if you've marked this level up here, this is a market open scenario even, right? The market just opened. Let me take this out now. And we've actually gotten our bounce. right? We've actually gotten our bounce, because if you if you want to measure this out, this is what you have here, right? You have this as your first bounce with market open, right? And a push away from price. Remember, you want price to touch your zone, push away, go back into your zone, and then you take your entry, right? So we're just going to play the next bar. Okay, so the next bar just went into this our zone properly. So to me now, what I think we should do is to plot our entry. Now, naturally, once price has given you first bounce, second bounce, you put your entry somewhere like here, right? Then you put your take profit. Remember what I told you, your take profit must be your target point first. Then you're going to adjust your stop loss depending on how conservative you want to be. Now, me personally, I might just be willing to look for somewhere around here where I feel price will be comfortable, and my minimum risk to reward must be 1:2 or 1:3 minimum. So you see that if we pull price all the way back down to here, we get a 1:2. But if we want to be very, very conservative, and let's put our entry up here like this, right? So this is what our entry looks like. So this is what we have here. Let's not try to manipulate this trade anymore. This is around 1:2.5. So let's continue. Next candle, and we're active on the trade. We're active on the trade. We just got tapped in. All right, boom. Take profit hit. Now, this is pretty much straightforward start to finish of what zone trading is all about. The setup started from this build up. First, we saw price reacting twice from here, right? Then immediately we saw price reacting from that level. We immediately recognized that, okay, something is happening here. There's a reason why price is really, really interested in that particular level, and that's the reason why we decided to pay attention to the level. Now, price broke out of the level, and after the breakout, the next thing for us to anticipate is just to anticipate the pullback to the same zone that price broke out from for first and second bounce. Like in this scenario, first market open as first bounce with an encroaching second bounce. Now, what I was telling you about zone trading strategy is that you see how we cut 1:2.5. I guarantee you this 100% of the time, as long as this zone here is where you put your take profit, you will always get swept. Like the TP will always get hit. Now, most, maybe 70% of zone trading strategies always tend to do much more than 1:3, right? They always tend to do a lot more than 1:3. So we are just watching price to see how price evolves. There is even another sub setup in between here, but I don't know, it takes a keen eye for you to notice it, right? Now, if you look between here, you might have seen you may have seen this, right? If you look at this, you see that this was market open. After market open, it rejected really low before you had this breakout. Then you have your first bounce, then you have your second bounce, and you can see that price took off, came back for a bounce, and then continued going higher. So, but if your entry is here and your risk to reward is 1:2, this is what your entry will be like. Now, our entries are usually pending orders, right? We want to enter with a pending order. So this is first entry for 1:2.5 with target at 1:3. So let's see if we can hit take profit on this. All right, boom, take profit hit. So this is back to back typical way to take out certain trade opportunities from zone trading. Remember, zone trading is all about identifying levels where price is reacting from. Do you understand? The moment price gets to a level and starts to react or act in any form of way, you know that there's something happening at that price range. You have to use a square or a rectangle tool like this to mark out the price range and say, okay, something is definitely happening in this price range, and I am going to be paying attention to see what price is saying, right, on this price range. So after you see that price has reacted from the price range, the next thing for you to do is to mark out the zone, which is the square, then anticipate or speculate the break out of that zone. The moment there is a breakout, whether bullish or bearish, you're waiting for it to reach its highest point or lowest point. That's where you mark where price is going to be drawn towards. The moment you wait for price to pull back to the zone that was just broken, you wait for your first bounce, a push away from the zone, a second bounce, you look for a pending order type of entry. Remember, for this one, we waited for price to be inside this level and we put our entry here. That way, only when price is moving in your favor, that price will tap you in. Otherwise, if it continued going down, you won't get tapped in, but it will be a failed setup. We broke out of this level, market open, we broke this level, market open, market closed here, opened around this area here. Remember, this is market open. You got this, this became your first bounce. After price broke here and came back to this same level again, this is your first bounce. You wait for price to enter. Maybe let's take this bar back to this point here and zoom this chart in a little bit, right? So that you see what I'm talking about for reference. So for reference, you see that at this point, price is still just touching here. So play the next candle. So now that price is deep inside this level here, you're going to put your entry at this top like this. Your stop loss can just be below this candle, or you can decide to drop your stop loss a bit like this, something like this. Then you put your entry. And what happens as soon as the market starts to play out? It pushed lower a little bit more, and you guys already understand, you already know how we played out. So you have price reattempting your zone, and ultimately we got our TP got hit at the end of the day. So this is the same zone trading over and over again. Now let me look for one more setup for you. For let me see, because there were so many setups shared over time, and it's a lot, right? So all you have to do is to take note of this particular setup and make it work for you. Now there's a scenario that you might come in contact with that might be surprising to you. So let me bring it out. That one is Eurocard. I think Eurocard, the same July 11th, Eurocard. So let's do Eurocard, and let's take price back to July 11th as well. So this is what? Okay, so this is even July, close to it, right? Okay, so look at this now. So as that one was playing out in the back test, can you already see a setup here? Now, if you scroll back, look at this. Can you see what's happening? Price came to this level here, and what happened? Rejection, right? Here, rejection, right? Here, rejection. So what you're going to do now is you mark out this as your zone. Let's tighten this a bit so that it will blend with the highest point, like the wick of this particular level there. So this is what our zone looks like for now. Right now, we got our breakout of the zone. This is the highest point that price got to after breaking out, right? The highest point. So we mark there as our target. Now you see price, market opened, it came down, and at this point we have our first bounce here. Now, what we are looking for now is, remember what I told you. After the breakout, you want to see from the highest point, you want to see first bounce, push away, second bounce, then you put your entry at the point of the second bounce, and then this becomes your take profit target, right? So let's play this and let's continue. Okay, so right now the market has rejected from this level here, but I'm not comfortable. Although this is it's possible for you to, so there are two ways you can do this now, right? You can either put your entry up here like this. If you put your entry up here, then maybe you can have your stop loss below this level, no problem. Or if possible, if you want to, you can still have your stop loss maybe somewhere here, right? But so for now, let's say we are taking the aggressive entry. We are not tapped in yet, though. Remember, price is still around here. We are not tapped in yet. So let's just watch. Okay, so price pushed below. Will price break here or will price hold? So now that price has pushed below, we are now deeper into this zone. So the best thing to do is to put your entry all the way here. Now you can adjust your stop loss to under this level, because this is what we have currently. Now, this is what we call a turtle soup or a fake out. You can see that price pretended to break this level and immediately it recovered. This shows us that, okay, we have gotten our full zone trading layout. Everything is set. Now, our entry has been made. It's just to wait and see if price is going to respect our zone. So let's continue skipping. We are tapped into the trade now. So let's observe everything. And boom, trade hits your take profit. Remember, this is your target point. So everything that happens here again is not your business. Do you understand? So you see how start to finish, this is where our entry was. Remember, if you guys remember very well, this is where your entry would be. This is your stop loss just below this level. And your target point is all the way just here. So you see, this one was a very smooth and easy 1:3. That's 3%, and very straightforward. This one had a turtle soup. So basically, this is all it is. All there is to zone trading, this is it. Do you understand? So now, to throw in something extra for you, you can use volume profile or any type of indicator. If you're using Fibonacci, you have to learn to calculate from the beginning of the trend to the peak, right? So for Fibonacci, this is what you would have. You would have price from here to here, and where you'll be looking to make your entries would be at between this level here, 0.6, right? Between this level here, 0.6 and this 0.79. These are the optimal levels to trade from. And you see price pushed and came back to 0.68 before pushing out. So this is also a zone trading strategy or zone trading setup that had a Fibonacci confluence. Now you can use any other types of confluence like volume confluence or any other type of confluence to accomplish the zone trading setup. But if you take everything I just mentioned to you now, I'm guaranteeing you that just go do your back test and then you can now start building from there. So just to make things easy for you, let's see if we can lay it out, right? Let's see if we can lay it out in a text. All right. So zone trading rules. Rule number one: wait for price action at any price range. Number two, anticipate breakout. Number three, wait for first test of the zone. After second confirmation, use pending order and enter. Full stop. So this is what you would this is basically what you would say is your zone trading guide, right? This is your zone trading guide. All right. So hopefully when you watch this video, hopefully after watching this video, you can now start to get a clearer picture as to how zone trading works. And I would be doing a follow-up video to this where I'm going to be talking about maybe two or three more setups that we took. I'll be explaining those two or three setups that we took very well for you guys to understand. And then I will also be throwing in a risk management reveal as to how you can differentiate between setups that are worth risk allocation and setups that are worth risk management. Ultimately, risk management is advised for everybody. Remember, previous results is not evidence of or is not a guarantee for future results, right? So I hope this video was able to help you understand certain things. Right now, if you watch this video to this part, here is what you should do for me. Right, this is my Twitter handle. All right, and my Twitter is set. My Twitter is King Ik first. So I have to write this in white. King Ik the first, like this, or King Ik first, right? So you guys should follow this account, and on TikTok it is KINGMAHNS. So, and then YouTube it is Brokey Motivation. So follow these pages, subscribe to the channel for you to be able to get feedback or more. When I conclude my order flow strategy, I'll be explaining to you guys how I was able to turn 13,000 naira to over 1 million naira within 1 week. Less than 1 week, it took only like 48 hours or 72 hours, right? So I will also be doing a breakdown, and as soon as I'm done learning this order flow strategy, I will be I'll probably teach it to you guys. But you have to follow and stay tuned, right? There's a lot more to come. So I hope this video helps you in any way. Make sure you share this video to someone who needs their edge. All you have to do now is to work on your exposure, work on your risk management, and you're good to go. Anyhow, I'll see you guys in the next one.